higher for the Nifty, 17,369, about 1.7% of an uptick for both these major indices. A very strong move on the upside, and it's a broad-based move that we are looking at. Look at the broader markets, for example. Both the mid-cap and the small-cap 100 indices are up by over a percent, contributing to these gains on the major indices. The India VIX is down by almost 5% at 12.9. 46 advances to 4 declines as far as the Nifty 50 is concerned. The stocks over there, so clear tilt towards the bulls in this kind of a session. When we talk about the other sectors as well, all the sectors of the Nifty are up in the green today, with sharp gains being seen from the Nifty Bank, especially 1.8% higher for that one, and all three constituents, be it the private banks, the PSU banks, or the financial services, very strong move coming in from all three of them as well. Apart from this, the realty stocks are shining bright, 1.6% uptick. You see the IT stocks gaining strength. In fact, this is the leading index today, 2.5% uptick for that one as well. Autos are higher by 1%, or pharma up by 0.6%. FMCG up by 1%. So it's an all across buying that you're actually seeing in today's trade. The top gainers, of course, include Reliance Industries. That's really contributed to the sharp move on the upside on the major index as well. 4.5% uptick for the Reliance Industries counter right now, 2330 the current level. And of course, news flows on the demerger of the financial services business, that's led to this momentum. ICICI Bank, Nestle Industries, Infosys, Tata Motors, the other movers at this point as far as the top Nifty 50 gainers are concerned. On the downside, you do have a far and few between stocks that are still dragging in the sentiments today. Sun Pharma, for example, is hovering about 0.8% lower at 983. Apollo Hospitals, Asian Paints, Adani Ports and Bajaj Finance, slight losers at this point in time in today's trade. Time now to welcome our guest on the show, Mr. Deven Choksey, joins in from KRChoksey Group. Welcome, sir, and thank you so much for taking the time out for this discussion. First up, a 1,000-point rally. What a way to end this financial year. Your thoughts on this kind of a move, the key factors that you believe have led to this rally today, and more importantly, is it going to be sustainable?
Good afternoon, Sakshi. Well, I think the last point is important, whether it will be sustainable. Today's rally is largely driven by the rally in the stock price of Reliance. And as a result of which, I think some amount of short covering has also happened due to weight rebalancing, which would happen in the index funds. And as a result of which, I think we are seeing the across the counter some greens, which is resulting into the market remaining at a higher note. Another layer to look at is the current year is ending today, and it has to have some amount of, I think, uptick at the end of the year, which could also probably meant, I think, some of the funds buying today, and that could have resulted in stability in the price. And last technical reason is that today being the first day of the new series, April
Yeah.
2023 series. So these are all some of the points heading into the recovery in the market and resulting into rally today.
Right. Now, as we step into FY24 starting 1st of April, what is your outlook right there? We've seen FY23 perhaps face the most kind of headwinds. Everything that could go wrong has perhaps gone wrong in this financial year. We saw COVID, we saw the Russia-Ukraine war, so geopolitical tensions were heightened, the energy crisis in Europe that was followed by huge inflation and the rising interest rates, the aggressive move by central banks across the globe. To top it all of it, we've also seen the Adani Group crisis and then the banking crisis as well. So everything, one after the other, the markets have faced. I think we're still lower by about 1.5–2% as we end this financial year, but we're still better off when we compare with the mother market, say a US market or a Hang Seng market right there. Do you believe the outperformance of the Indian market may continue in FY24?
On the corporate fundamental side, if I have to keep my eyes on and I think stay focused, I find that FY24 is likely to be better than FY23 for a couple of
Okay.
reasons. FY23 probably, as you rightly mentioned, some of the negatives started with a negative, a significant negative, wherein the commodity prices misbehaved due to, I think, whatever the war-related reason in the crude oil prices thereafter. And misbehaved means, I think they went up sharply, they came down sharply, and ultimately created losses in the books of either the commodity producing companies or commodity consuming companies. So that was not a good time to, I think, look at the entire corporate balance sheet probably. The current year is starting on a promising note. The crude oil prices are stable. Commodity prices have come down and they are stable. On the other side, industrial demand, because of the government's heavy spending, is continuously rising. And at the same time, the retail consumer is powering the economy with the discretionary, non-discretionary spending that is continuing. So all in all put together, if you ask me, the corporate sector performance this year should be on a reasonably steady to higher demand in the local economy, and also I think stable profitability margins because of relatively I think stable behavior of the commodities in place. Leaving one negative or some doubt is I think global uncertainties. Now,
Hmm.
global uncertainties are here to stay for a little longer time because I think a lot of damage has already happened in the system for a variety of reasons.
Yeah.
In my viewpoint, I think India is relatively, I'm using the word safe from that perspective. That I think global economy underperforms. Probably, I think it's something which India will not get much affected. At the same time,
Sure. Mr. Choksey, I also wanted to understand from you, given the kind of challenges that you point out, that despite the fact that you believe the markets may be in fact better than the previous year in FY24, there are still a lot of challenges or overhangs that the markets may have to continue to look at in the current scenario as well. The question that I have for you is that, how should a small retail investor really approach their investments in equities in FY24? What is an ideal way to approach the equities with the fresh funds that they have, that they may want to deploy, the correct strategies for them?
so for retail investor, I think the time cannot be better than what it is currently.
Okay.
On one side, the economy's GDP, and the size of the economy is $3.5 trillion. On the other side, our market values have come down below less than $3 trillion. Whenever in past the market value has gone below the economy value, the reasons have followed and markets have risen thereafter. Currently, Indian investors, retail investors are getting an opportunity to buy something which is significantly corrected, where the fundamentals have not weakened, but due to market technicals, I think the stock prices have corrected. The investor is getting this opportunity.
Hmm.
In my viewpoint, I think if you don't buy in the falling market, then you will always end up buying in the expensive market, which is rallying on the bull side, in
Hmm.
bull returns. So
Hmm.
from that point of view, I think this could be a better time in coming 2 months, 3 months, whatever the corrective market that we are likely to see would be
Hmm.
a good opportunity to accumulate and buy the portfolio.
Okay, understood. Yeah, are there any particular sectors or themes that you may be bullish on as we begin this new financial year?
I'm convinced about the spending, the growth, the consumer spending. And I believe that discretionary, non-discretionary spending in auto will help auto and auto ancillary.
Hmm.
It will help stable commodity prices, will help the FMCG companies and also FMEG companies, the electronic goods companies. I also believe that bank credits, retail credits would probably continue to grow faster in this period because the consumption is on rise. Infrastructure spending is helping the capital goods segment, and that's where they are pouring with new orders into the order book of most of the capital goods companies. So
Hmm.
that area remains pretty convincing. Companies which are adopting technology and growing the scale and the size of the business and producing growth, they remain, I think, definitely more convincing. So yes, I think I'm more convinced about the stability in respective areas which I just mentioned. And that's where I believe that opportunity is around for investors to begin with for the FY24 year.
Okay. And in case one has to really select some stocks, do you have any stocks on top of your radar?
So commercial vehicle looks, I think, convincing to me.
Mm-hmm.
Some of the auto ancillary companies look very convincing to me. Is in the capital goods segment where they are holding 2 3 years of horizon from order book delivery perspective. They look
Okay.
very convincing to me. So I am selectively convinced about the respective companies within the sector which I mentioned.
Okay, okay. What about Reliance Industries? I mean, like everybody would want to know the kind of rally that we've seen today, 4% oil, and of course, this on the back of the demerger news that's come about. Of course, we knew that it was coming, it was already announced, but finally things are looking like they're starting to move on this as well. What kind of opportunities can the existing Reliance Industries investors really hope to achieve with the stock in their portfolio? And what should the new investors now really look at? What can this news really unfold in terms of the kind of movement we can see on Reliance Industries fundamentals and on the stock performance?
The fundamentals remain as convincing as they were yesterday, and even today, I think there is no major change. As you rightly observed, Geo Financial Services demerger news were already announced.
Hmm.
Probably the market was not convinced, and as a result of which the stock price came down because of the reasons which are more technical than fundamental.
Hmm.
Uh, the current announcement suggests that Geo Financial Services could be as large as some of the largest corporate cooperative banks
Hmm.
in the country,
Okay.
and uh, and also I think the largest among the what we call I think the largest bank in the country, which is SBI. So that
Hmm.
is the promise that Geo Financial Services hold. It starts the business with around three or four distinct business model. One would be the NBFC for with the retail focus.
Hmm.
Second would be distribution of financial products, banking products. Third would be the manufacturer of the products like insurances, even mutual funds and other products that they would have, and other products I think which are largely dependent on the side on the side of I think the banking, the geo banking company that they have, wherein
Hmm.
SBI is 30% partner. So
Hmm.
those products I think which basically banking company would address, I think they would be there in place. So in
Hmm.
my viewpoint, that no, though everything will not get unfolded at the same time, but in my viewpoint, I think the story is unfolding for next 10 years. To me, I think it looks like a good opportunity from investment perspective.
Okay, and you also pointed out in the note that you've shared with us that it will have a huge customer base with the existing platforms of say Geo, retail, and money control as well, which can be offered and could give a competitive advantage of acquiring customers as well. Going forward from here, what kind of changes do you really expect as far as the bottom line is concerned, and an addition or an upside that we can expect to potential move on the Reliance Industries stock because of this?
So starting with some number to put the calculation which you are asking me to do,
Hmm.
they are starting with a 6 lakh crore worth of treasury stocks in their balance sheet, which is their net worth. And on 6 lakh crore worth of amount, if one is assuming that it is the amount I think which they will be deploying,
Hmm.
and they are earning 3% NIM, then we are talking about 18,000 crore worth of revenue
Hmm.
from net interest income alone. And should they adopt the retail lending, which is buy now, pay later, or 0% EMI,
Hmm.
then the NIM can probably go up to 10% as well because of the
Okay.
subvention pricing mechanism. So from that perspective, if you look at it, I think it could be the ballpark range of around 60,000 crore. So anything which is
Okay.
18,000 crore to 60,000 crore kind of a revenue book that one could possibly ask for from this kind of a balance sheet that they are launching the operations with.
Okay, and the potential revenue you mentioned in terms of on a 25 lakh crore AUM that you believe could range from 75,000 crores to about 2.5 lakh crore rupees. So that
That's
accounts for the 10% NIM?
that's right, because as I
Okay.
said, that subvention pricing products would allow them to earn that kind of thing. Though everything will not be sold on subvention pricing, but
Hmm.
yes, that's a range that one can talk about.
Okay, understood that. Any particular targets that you may want to share on Reliance Industries? Can it double from the current levels that we are seeing right now? For all those long-term investors who may be wanting to catch this rally, and would you want them to really chase the momentum at the current level as well?
I wish they remain long-term investors. If they do, then possibility of I think doubling, tripling the price for next 5, 10 years, I think is definitely possible.
Okay, well, understood that. Thank you so much, Mr. Choksey, for being with us on the show and discussing with us all these insights on the markets and on these various sectors and stocks you've discussed with all our viewers today. And it's great to have you on the last trading session of the financial year, and we shall continue to seeking more insights in the new financial year as well. And here's hoping that for you and for your entire team, the new financial year brings in a lot of wealth and a lot of health and good news too. Thank you so much for being with us.
Thank you, Sakshi. Thank you for having me on the show, and all the best to all of us.
Thank you so much. All right, so let's quickly look at how the markets are ending the last trading day of FY23. 965 points higher currently for the Sensex, 58,930, slightly off the day's high mark, but still about 1.5% up for the Nifty as well, 17,341 the current level as well. So that's how the markets are looking like. Of course, after days of ups and downs that we've been seeing and volatile action, the last trading session does give us a hope of momentum continuing and things looking up and green in the new year as well. And with that, we wrap up this edition, but do stay tuned on to Business Today TV to track all the news from the world of business and stock markets. You can also continue to engage with us on our social media platforms, that's Facebook, Twitter, LinkedIn and Instagram as well. Many thanks for tuning in. Until then.
Nandita needs no introduction. The nomenclature, the name of this session is Behind the Camera, a woman.